Good evening, friends. Welcome to the session. Let's start. Just give me a minute. I'm sharing my screen. Yeah, so I'll be sharing my entire screen. Yeah, there the screen is shared. So I'll shift it to the next monitor of mine. So, if anybody were there in today's session or yesterday, what we had seen was that market looked stretched at the current levels, and also just give me a minute. Let me do some checks. That and 26,000 levels which we had seen for the markets, if you can remember, that's where the maximum OI in the call was. So today's high, quite on expected line, unlikely to cross such a big huge 4 crores open interest build up. So market topped out today at around 25,930, sorry, 25,870. So that's nifty. No, 25,989. So that's 10 points from the current levels. Did anybody follow that levels? The same level we had discussed yesterday in the pre-closing, plus we had discussed that same level uh, and on today's morning session, pre-market open. Okay. So 1 or 2 days before the expiry, what becomes a big study for you is you should always follow is the OI build-up part of it, along with the PCR. Since the PCR was above 1, so it market did not even decline, but upside was capped. So let's analyze the markets. I have prepared the plan. If you see on the daily chart, see the swing is up, no doubt about it, fine. But if you see last 2 days, these are what we call typically narrow range body candles, in which market opens up, doesn't do anything throughout the day, and then just closes this. So what does a narrow body range candle do? It tells us that markets are overbought. Are we saying that just because the candles are narrow range body? No. If I go to my Bollinger Bands, as I am highlighting, that's the study which we are now going to use. Markets are heading towards an overbought on the daily time frame charts. The every spike towards the upper end of the Bollinger Bands, you are seeing market seeing an intraday highs around that, and it's just closing on a flat note. And today's candle, if you see, is also what we call a spinning top. See, a spinning top candle, when it comes as a trader, you'll have to take a note of it. So, spinning top is nothing, it's like a spinning top which we had seen in our childhood days, which means the body is very small. The distance from the body till the high and the body till the low are same, equidistant. So, which says market did nothing, it opened, went up, came down in equal proportion, and closed around the same levels. So spinning tops, when you get, you should take a note of it. Why? Because spinning tops generally turn out to be a reversal candles. If the low breaks, then we see a dip in the markets could be towards the moving averages or the gap. So the moment you see a spinning top, just mark a range at that spinning top. That's it. Which means let prices swing out of this spinning top formation. So let's go and put it in a trade plan. So Nifty, it's more of an indecision, and spinning top is indecision, and it's overbought around the upper Bollinger Band, and the candle pattern is that of a spinning top. Resistance we have taken at 26,061. So from where did we get this resistance? I go back to my Bollinger Bands. So in the Bollinger Band, the upper end of the band, if you see, is around 26,061. So that's where the resistance is. And on the support side, we have taken 25,791 is where the start of the gap is. 25,791. So this gap over here. Okay. So if I mark a boundaries outside today's high low, which is the spinning top candle, these are the boundaries I'll mark, and this is the range I'm expecting, a broader range. Right? That's how markets are today. Technical study importance will be the candles pattern itself, because we have seen a distinct candle pattern today, that of a spinning top plus the Bollinger Band. Why Bollinger Band? Because an upswing, once it stretches, it makes prices overbought. And the open interest build up side, let's go and have a look at it. See, open interest build up, the series has just started today. Right? So we have to take note of that, because more or less 1 to 2 days before the expiry, I have seen open interest shows us a very good indication. But right now, there might be fluctuation in the OI buildup. But still, as a trader, if you get into the habit of checking something, we'll have to do that. So the expiry is over. Let me in Stocko Incred Money go to the Insta Options platform, and I'm going to select the next Tuesday, which is on 17th. So on the 17th expiry, as per the current price, just stretch this. If you can see, yeah, by distribution will be wide apart from the current price, because you have one full week, and let's see which side the volatility increases. So based on the current price, still 26,000 is where the maximum OI buildup is in the next week expiry. So which puts it at around 59.05 lakh contracts. After that, it's evenly distributed all the way till 26,300. So keep a watch on 26. That's also around today's high of the spinning top high. So that's how I've taken 26,000 as the OI buildup on the call side. On the put side, if you see, there's a big buildup only around 25,000 level, which is way below. So if I take from the current price, 25.9 is there, which is just 35 points below, and 25.8 is there, then 25.5 is there. So put R, we'll have to look at the towers which are the biggest. So this is not going, may not come into play for tomorrow's session, or even this one, 25.500. Right? So more or less I would put it at 25.800, where the OI buildup in put side is 32.65 lakhs contracts. So that's why I've taken 25.800. So I've written it down. And the PCR is put call ratio. So I'll go to my platform, which is Stocko Incred Money Insta Options. I just click on the PCR and I get it. You can track this in the live markets also, right? So it's 1.04, which suggests that there's more I build up in puts than in calls. So put is 6.66, call is 6.47 crores. So more I build up shade higher inputs. That's where the PCR stands for. Straddle price, as I said, you get into the habit, if you are a trader, to see the straddle price. So today's straddle price is 280, and it will be high because you have one full week of theta built into it. So typically start of the series, the next week, current week expiry is just started today. So the time value or the theta part will be substantially high in both the call option and the put option. So the straddle price is 280. And from the data which we studied just now, what conclusion can we draw in terms of commentary analysis? There is a lack of momentum. Let the spinning top high or low break, or else such a range bound markets are likely to be between 25.8 and 26,000. Post that, let's go and have a look at Nifty. So I'll go to my platform, which is Stocko Insta Money Trading View. So I now go to Bank Nifty. Right. So Bank Nifty also on Bollinger Bands, which is a measure of overbought and oversold, which is a relative measure, not absolute means it has touched, mean it has to come down. No, it's whatever we do in context of technicals is about probabilities and not absolutes. So there is a probability markets are looking stretched, Bank Nifty, and it is getting overbought around the upper Bollinger Bands. So it's not only on the 20. If I check all the three time frames, 20 for me is a short term, 50 is a medium term. It's extremely overbought, which means it has stretched out outside the upper Bollinger Band on the 50, and the long term to me is 200. on a 200, which is a long-term overbought for this market, is also stretched on the Bollinger Band if I'm using an average of 200 day. So look stretched, no doubt about it. So that's the conclusion from the Bollinger Band side of it. And the candles, if we see today, we just now saw in Nifty it was a spinning top. Bank Nifty hardly moved today. So that's what we call an inside day, which is yesterday's high and yesterday's low. Market traded within this range. Inside day also tells us there's an indecision because traders don't know which side prices are likely to go in the near to short term. When we say near to short term, it's 2 to 5 days sort of a time frame. So an inside day suggests that an inside day don't last for more than a day or two. Right? Even if you see over here, you had an inside day. Let me highlight it for you. This was an inside day. After it dipped down and then this upswing started. So in the bank nifty, it's also we are sideways and overbought. The chart pat or the candle patterns is that of an inside day. Inside day means today's price action was within the high and the low of previous day's price action. Resistance, I'm still putting at 60,900. That's where my upper Bollinger Band is. A measure of overbought on short term, which is using a 20 period average. And also yesterday's high, 60,900. So that's clearly outlined as the resistance. Support is around 60,300. From where we are getting this figure, 60,300. So if I take my cursor over here, the start of this gap is somewhere around 60,300 levels. Right? So I've taken that as a support levels. Any dips should find initially a support at this gap. Gaps are always, remember, a support levels when the first dip happens in the market. I'm not saying that the dip has to happen. If it happens, the gaps provide the first support levels. So that was the setup and technical study, seeing that markets are stretched. The swing looks tired. Fatigue has set in the price with no movement. It's just opening gap up and then just staying there, giving those intraday gyrations out there, which says that it's overbought. Let's go and check the OI buildup part of the Bank Nifty. So now Bank Nifty is what we say a monthly expiry. So I go to my Insta Money platform and Bank Nifty. The expiry is on 24th, which is still few days left. So if I can see the OI buildup is way up here on the call side, which is 61,000 and the put side 60,000. So based on the current price is 5 plus and minus 500 points from the ATM. So that's a 1,000 point range defined for Bank Nifty. On the put side, the OI buildup is in 60,000. On the call side, it's 61,000. And right now, the ATM or where we have currently closed, let me have a look at it at 60,600. So we are at a midway point. So traders are 500 points above and below the current price as far as the writers are concerned. And the straddle price is 975. So which is the uh, premium of ATM call option and put option. And on the analysis part of it, it can dip. Why I'm saying it can dip? Because an inside day, given it's overbought, if we break the lows, we can dip down towards the 60,000 mark, which could be 62 plus or minus 200 points from the lows. Now let's go and have a look at the gold charts. So I'll go to gold on MCX. So gold futures on MCX, what we saw yesterday was still that consolidation is continuing, which is neither is moving up nor is moving down. So all the markets from high volatility few days back has now gone into a very tight and a narrow range, which is of a very compact consolidation. Same is in case of gold also. So that's gold. And 50 to 62% retracement of the last swing. The last swing was a downswing, and it's quite typical for the market to get a hit that high and go in for a range bound consolidation. So this was the swing low. Once you have a swing low, all the traders out there, the first measure which you use is a retracement. And 50 to 62% retracement is a typical retracement of a move. Post that, let's see whether gold takes out this high and reaches the high, or gold continues to remain in a range bound manner. So, like all the asset class, when I say asset class, we are just doing Nifty and Bank Nifty plus the gold. From very high volatile, they have now going to a low volatile and a consolidation phase. And if you want to trade gold and silver on an intraday, you can visit our website. So we have done a session on gold and silver, how to trade momentum on an intraday basis. So if you scroll down and if you go over here, and today also we have a session. If anybody interested, you can go to stocko.in. So today we are having a session at 4:30, and the session is scalping techniques for expiry day, in which we are going to do Nifty and Bank Nifty today. So today was a Nifty expiry. So we are going to do a case study on Nifty. We'll see how Nifty could have been traded based on the momentum setups. So if anybody wants to join this session, we are still open for registrations. You can go to stocko.in and you can register. And for gold and silver, if you want to trade intraday, you can go to our page, scroll down, and you'll find in details momentum trading gold and silver. There we have discussed strategies plus setups plus the indicators or the oscillators which you use or the technical study based on which we are going to trade gold. So I'll read out the disclaimer. Whatever we discuss was for educational and informational purpose only and does not constitute financial advice. So we'll be there for the 4:30 sessions on scalping techniques for day trading. So that's all from my side, friends. Thanks. Have a nice day. Let's meet up at 4:30 today.